Hi, everyone, and welcome to Mish's Market Minute with Mish Schneider. Thanks again to StockCharts for hosting me. Again, I always have an action-packed half an hour to fill, so here we go. I thought, given the fact that on Thursday we woke up to a little surprise dip in the market, it would be a good time to review not only the indices, but also the economic modern family as a really good way to see what the market is thinking going forward in terms of the election, the virus, the stimulus, and then also a way to look at the outliers, the bonds, the VIX, the junk, the LQDs, and the dollar. But our real focus today is going to be on the commodities. Lots of questions about gold and silver, what's happening with steel, copper, and wood, and then the agriculturals that I have been talking about for a very long time, wheat, corn, soybeans, and sugar. And since my last couple of segments, one on your Daily 5 was about energy, I'd like to review the energy, a couple of ETFs, oil, gas, and then the big banks since they have been reporting earnings XLF. Okay, so we're going to start here with Qs. And what's interesting about the Qs is that if you're looking here at the real motion, it's broken down below the 50-day moving average, even though it's still well above the moving average here on the daily chart. And I always like to point out the real motion indicator because sometimes it is a barometer that tells the weather before we even know whether it's going to be chilly or warm. And what it's telling you right now for the real motion indicator and the momentum is that we're waning a little bit. So we're getting a little chilly here in terms of the NASDAQ. And that makes sense because even on Thursday, as we started to see a big down move in the NASDAQ stocks, we actually saw the Russell 2000 get to start inclining. So we're starting to see what started a couple of weeks ago, which was a rotation into some value, into some small cap, and a little bit more out of tech. And there could be good reasons for that. The Apple event, which I thought was kind of a dud, and also Amazon, a downgrade, interestingly enough, would be reflected here. And even Tesla, which started out very, very strong, even though it's not part of NASDAQ, also did not able to get follow through. All the big ones are down in terms of the NASDAQ. Even Netflix had started up strong on Thursday and wound up negative, Facebook negative, Google also negative. So here you go. So, again, the market is, I think, trying to figure out who's going to win the election. And I believe that a Biden win, the market thinks, is going to be better for some of the more cyclicals and not so much for the big tech stuff because of the taxes, etc. But nonetheless, if you are looking at NASDAQ, what you want to do now is you want to definitely be cautious and wait to see if this can get back over the 50-day moving average in terms of the indicator, while we look at some support here at around 285 by the 10-day moving average. And really now, in order for this to prove itself worthy again, it would have to get back through 290. Now, if we move on to IWM, a little bit of a different picture here in that it is well over the 50-day moving average in the real motion indicator. You can see it's gaining in momentum. And even though it sold off initially on Thursday, it took back not only the 10-day moving average, but the 160 level. And now we're looking at that possibility again of, can this go on and make new all-time highs? Of course, what's doing, and interestingly here, is that this is ignoring all of the bad news we started talking about, the virus, the election potential, upsets, etc. And also earnings seasons, which has just started, has been one of the positives so far, but a couple of downgrades along the way too. So rotation into IWM, generally a healthy sign, optimism for the US economy. And now if we move on to the SPYs, that's sort of neutral, I would say. It's come down in momentum, but it's still holding the 50. So NASDAQ by far is the weakest. Also holding here the 10-day moving average at 343.68. But again, I'd like to see this at least be able to get back over 350 to show that this has some muscle. So right now, the downward move that happened Thursday morning has not had any really great follow through to the downside, which is a good thing, as people probably came in super nervous. But nonetheless, we really have to see what happens here, whether the SPY can hold, the Qs continue to go down, and whether the Russell continues to take the lead. And then to round it off, we've got the diamonds. And the diamonds also actually holding pretty good in the momentum, sitting right here on the 10-day moving average. Kind of a gentle correction here, not too bad, actually relatively orderly when you think about it. And again, now 50-day moving average comes into factor at 279, with 285 really being your pivotal area. Now, if we move on to the sectors, the modern family sectors, really what had kept me on Thursday morning from getting too negative was the fact that the retail sector, which is really what started showing its colors as a lead, considering we're a consumer-driven economy, that people are still buying, and it's had some relative of confidence in the fact that we'll get through this pandemic. We're still seeing it here. So you keep an eye on this. This made new all-time highs, amazingly so, and it's kind of holding near there, not quite to the high where it was on Wednesday, but certainly giving it a run for money, and more importantly, proving that this Wednesday high could have turned out to be a reversal top, and it's, as I'm speaking to you now, it's showing that it is not. So this is one of the best signs along with the IWM. And like I said, this is a whole rotation into the economic modern family that really is a much better sign for the US economy going forward. So who knows what it's counting on, whether it's a Biden win, more stimulus, we get through the pandemic, things are going to continue to open, we're better off than Europe. Whatever it is, right now, that's where the money is going. Now, if we move into the next sector, it would be IYT. And IYT is also holding up really well. Look at that momentum here, accelerating, actually almost going to new high on the momentum, as this also made a new all-time high. What's amazing to me is we talked for years about SPY making a new all-time high, tech making a new all-time high, Q's making a new all-time high, and I always added, however, retail, small caps, transportation, regional banks were always lagging. And so it's so exciting to see that those three, Granny, retail, I like to call her, Tran, and Grandpa Russell, are now showing the leadership here. This is a wonderful dialogue that I just love to see, and it really makes the modern family look even more spectacular than what they've already been in terms of prediction here. And so this is holding the 10, and we'll see now what this is, just a consolidation or whether we're going to take it one step further. From IYT, let's go to SMH, because sister semiconductors, as I like to say, is also not quite as weak as NASDAQ in general, but losing in momentum while we're seeing it gain in those other sectors, yet holding very, very critically onto the 10-day moving average at 183.50. I would call 190 really the pivotal area here. I wouldn't discount, because some of these companies can still manage to come back. And of course, we're in earnings season, so I'd keep an eye on it. But nonetheless, right now, if I wanted to stay where the money was, I would stay in the first few sectors that I mentioned and wait to see what happens here. And then finally, we got to look at the financials here. Now, these are the regional banks. We'll look at the big banks later on. But this is KRE. This is the regional banks, and that earnings has just begun. And it's had a mixed earnings. The big banks are doing well. We'll talk about that a little bit later for a myriad of reasons, and we'll take a look at what that says in the chart. But what's interesting about this is that this has been such a laggard for so long. And now a big test today was that it opened up today, being Thursday, underneath the 50-day moving average, held it, now is taking out 39, which I think is key. And look how close we are now getting to the 200-day moving average. And I had talked to you about this before. Right now, the momentum backed off a little bit from the zero line here and the high, but looks like this is coming to its own. If this starts to move up, there's a tremendous short float here in the banking area, and we don't even have to question it. As technical traders, all we have to do is know that there's an opportunity here. If this continues to hold, breaks out over the 200, and you have a relatively good low risk right under 38 to see if you can get a nice pop. Now, the next we're going to go to is the commodities, or what I like to call at least the outliers. And I'm very, very interested in gold, because there's been a lot of people who are saying gold has bottomed, and yet I have yet to buy back my gold. I was long gold all the way through here with my clients. We got out when it broke the 50, and we have not gotten back in. partly because it hasn't gotten through the 50 yet, partly because I'm really not seeing a great floor, and partly because if you look at the momentum, it's pretty god awful. And so I'm not really seeing any reasons yet to feel like gold has bottomed. And so what I would be looking for with gold, and by the way, there's a couple of reasons. We're going to take a look at the dollar, and even the rates are actually right now, the flattening of the yield curve has been a factor, which by the way has helped a little bit on that economic modern family too, but not so bullish for the gold. That doesn't mean we still can't go into what I've predicted, a stagflationary environment, particularly driven by food, and we're going to get to that. But what it means right now is gold is not necessarily where I would want to be unless I was just looking at day trading. What I'd like to see with the gold is, as we're looking at some support here down here along all this momentum, I'd like at least to see it break through this first Bollinger Band right here. Ideally, you want to see it get back over the 200-day moving average. And then on the price, I'd like to see this be able to at least get back through 180. If not, I would be looking for an opportunity to buy closer down to around between 170 and 175. Right here, we're in Nowheresville, and that's why I'm keeping out of it. If we look at silver, same kind of thing. Better in the momentum than gold, interestingly enough, because remember gold was under the 200, this is above, but not able to clear this Bollinger Band. So I'd like to see that clear a little bit. And we're sitting right under that 10-day moving average, also under the 50-day moving average. So again, I'd like to see maybe another at least test of the lows that we had here, which was at about 2025, and see what happens from there, or at least make some kind of convincing statement here on the momentum that it's starting to shift more positively. Now, I also want to look at the outliers, as I promised, with VIX, because I think this is something to keep an eye on as well. We had 3 doji days here in a row. A doji day meaning that the open and the close was relatively the same, so you can see these in the candle. And then the pop up on Thursday with the market coming in lower. But it hasn't really shown me anything. Take a look at the momentum here. So if you're looking at the fear factor here, there's still a tremendous amount of complacency. You had a little pop Thursday, but the complacency here, you can see it in the real motion indicator. And in the real motion indicator right now, what we're looking at is a situation where the momentum improved, but not by that much. So this is another one that I'm always keeping my eye on as well. And right why, that's another thing. This market seems to be passing through all the bubbles like it's nothing, and that's a good thing for people who want to be buying the market. I also mentioned I was going to show you junk. And this is important because this is where the Fed's playground has been. And so far, this has been holding up above the 50-day moving average, still holding up here in the momentum indicators. So that means right now, no real signs of weakness there. That's good for the market. Not every sector, but at least overall good. Here's LQD. These are the high-grade investment bonds. This is also holding above the 50. Even though we have a little bit of a divergence here in the momentum, it's still under the 50, but holding the 200. This is another place if this starts to break down on the real motion under 200 and break down under the 50, maybe that'll be an early sign of weakness. We're certainly not there at this particular point. And I told you I was going to show you the dollar. I'm going to do it through UUP. And UUP actually, look at that, went right down to the 50-day moving average, started to show the momentum improving here, well before it was below the 50. This is why I love these real motion indicators. If you were just a little bit patient, it took it out. It came back below it, but it's back above it right now. It's clearing right here a little bit on the momentum of the Bollinger Band. And so right now, this strong dollar is also another reason why the market is looking out, first of all, at some safety play in the dollar against Europe, which is a little bit of a mess, number one. And number two is that it's also looking at the fact that this is why the metals may not necessarily be the right play for right now. Now, let's go back to the metals, since we're talking about metals, and let's go to XME. So XME is the metals and the mining. This to me is much more interesting right now. First of all, look at your momentum is very strong. Secondly, it's above the 50-day moving average. It's in a bullish phase because the 50 is above the 200. And if I'm looking at this on a weekly basis, which I can actually look at real quick here. If you look at this on a weekly basis, you can see that if this has a weekly close above 26, even though we have the 200 week up here, this would be a really nice breakout after a lot of consolidation. So I'm watching XME very carefully. I have a note to myself to get in if it can have a weekly close over 26. And along with that, JJC, which is copper, is certainly not showing any negativity here. Right now it's looking pretty good. This is a hard instrument to trade. Even though it's underperforming the SPY, it still looks pretty good here on the momentum indicators, and it's sitting here above the 50. And if we take a look at US Steel right now, US Steel also looks good to me. I have another note to be looking at buying steel on a weekly close over 9. Look at your momentum right here. It's very, very strong. Not quite at the historical strong high when it was up here, but actually really in terms of price outperforming here in the SPY. So commodities, except for gold, which would be more of a hedge, silver, which is not really sure what it wants to do, steel and copper and the miners are also looking pretty strong right now with a lot of potential. Now, if we just move on to another good indicator, which is wood, that has come off, but it's now testing support and still has pretty good momentum here. I don't necessarily want to trade this. This is a very low volume ETF, but it's another good indication in terms of the wood to gold ratio. Wood right now is outperforming the gold, which is generally good for the economy. All right, so now let's move on to some of the agriculturals here. Let's start with wheat. I've talked to you about wheat before. I hope you guys got long wheat. I was telling you to buy this. And so right now you can see the momentum is great. It's outperforming the SPY. Hasn't quite gotten through the $6 range yet, but it looks like it's tackling it. And more importantly, you have a really nice level of support now between 550 and 575. So keep an eye on this. I think this can shoot up for another leg up if it can get a weekly close over 6. Corn, we have skin in the game. We actually bought corn yesterday. We were a little late to the party, but sometimes with these commodities, when they start proving themselves, it's not a bad time to get in as long as you understand your risk. This also looks really good, and a weekly close over all this consolidation here at 1355 should send this up. Look at the momentum on this. This could say that it's a little bit overbought at this point, but I think because this has been in a base and so beaten up over the course of years and years and years, I wouldn't even worry about that because something overbought can get more overbought, and these commodities can really get moving. Same thing with soybeans. Consolidating. Came off on the momentum, but that doesn't mean there is an opportunity there. Most likely with this, I would probably now at this point want to see it clear like 1620. And again, another opportunity. So what does all these food commodities tell me? They tell me that we're heading into some kind of a situation where the stagflation would be food driven, not oil driven necessarily, and we're going to take a look at that. And certainly not driven by gold. So that's just a new dialogue that very few people have been talking about. Sugar is another one. Whoops. There we go, cane. This also is starting to do well. Also, the momentum has come off. It's made a big move, but look at this base it's clearing out of. So 6 in cane is really going to be very, very good support right now. And I'd like to see it get through this 635 level. But if it does, I would expect this to go higher too. So the bottom line is that you might have a nice move in the metals, particularly the mining, the steel, the copper coming up. Wood and copper telling us that we're in better shape than what the market is necessarily telling us. We are having a rotation right now into the small caps. That's good. And so we'll see what happens with these food commodities and what happens in a while. But that's all together a pretty good sign, along with complacency that we're seeing in the VIX, not too bad, junk bonds in the LQDs doing well, and the dollar going up a little bit as well. So that's kind of where we're at. Now let's end with a look at XLE, because the energy sector has been super beat up. But what's interesting me right now about this is that you had a golden cross here in the real motion indicator. The 50 is still above the 200, and the price on terms of the real motion indicator is above the 200. Look where the 200 is here. Way, way above that. So what this is telling me now is that energy is trying to find a bottom. So at this point, you could be a little bit more patient, but I think if we can get through this 50-day moving average in real motion, even if we're not there here, it would be certainly worth a probe. And I'm looking about really a move, maybe a weekly close. I like using weekly close these days because it sort of takes out the volatility of over 31, 31.25, and you would have a relatively good tight risk. We also, same thing with USO. Everybody's so bearish in the energy and the oil, and with good reason. But at the same token, there are many, many countries, including ours, by the way, that are still very dependent on oil and gas for the economy. And even though this has yet to take out the 50-day moving average here, look at it here. This is not only having a golden cross as we speak, but the momentum is inclining. This just has to have, at this point, I'd say the most prudent thing is a confirmed phase change or two closes above that 29.06 where that 50-day moving average is. And the same thing with natural gas. Seasonally coming into its own, well outperforming on the momentum indicators. Again, though, underneath the 50 and underneath the 200, you get a couple of moves here over that 1275 on a closing basis, and I think that too is an opportunity. Now, I said that I would end with a look at the financials and particularly the big banks. So I want to take a look at that because we noticed something very interesting about XLF. Now we know Goldman Sachs, Wells Fargo, JP Morgan, Bank of America, Morgan Stanley, they've all reported. And even though one of the reasons why the better reports were in Morgan Stanley and Goldman Sachs, because of the fact that they have an investment arm and people are investing, they've also started to put less money aside for their loan defaults, which means that whether it's wise or not, they're looking more for an optimistic future as opposed to more people and more companies going into loan defaults. So let's see what this says. What really interests me here is, again, look at the divergence in the real motion indicator. The 50 and the 200 are down here. Price is well above it. And even though we've come down a little bit, we're still strong in momentum. But this is what really interests me right here. That is that we have the 10, the 50, and the 200 converging. That happens rarely, and it happens rarely when all of those moving averages are together and the price is right there. So what you have here right now, considering the fact that the momentum is showing that things are improving, is an opportunity, probably one of the tightest risk opportunities that you can get. Now, considering I would probably wait till Friday, and I'd like to see it close maybe over 25. If that's the case, and you can get in over 25 based on that, whether you do a full position or a partial position, you've got a really good risk, I'd say, if you really wanted to play it tight, to under 24.40. And then you can see, maybe you can get a nice move up, maybe even to the highs that we had in September, but I would even say possibly even higher, because if you can get through 26.25, and let me see if I can show this to you. I don't think this is right on these weekly moving averages. Hold on. Yeah, that's better. If you can get through this 26.25, then you're also taking out the 200-week moving average, and then all of this starts to look like a nice little base with maybe a move, about another $4 move. I wouldn't get nuts, but it could at least go up to the highs that we had here at the beginning of 2020, a little bit over 30. So that's it. So don't listen to all the gloom and doom. Just watch the charts, just watch the Modern Family, keep your eye on the commodities, and at the same time, also keep your eye on the VIX and the complacency, the junk bonds, and more importantly, let's look for the new opportunities that could be emerged potentially in energy and financials, as well as, like I said, those food commodities that really look like they want to start exploding as we get into the end of the year. Okay, that's it. Thank you so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.